Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and I want to address those investors that are doing 1031 tax deferred exchanges. Now, a 1031 was originally called a Starker exchange. The reason why is this whole family decided to sue the IRS because they were selling a property and they didn't want to pay taxes on it because they were buying more property. Guess what? This wonderful family won. And so now you can own a property, and at the end of it, if you want to sell it and buy at least the equal amount or greater of more properties, you don't pay the recapture tax on your depreciation schedule, which is 25% of what you've depreciated over the time that you've owned it. And then capital gains tax, which we know is getting greater. So it's like having a free loan. But here's the important thing. If you're selling that subject property, make sure that you know with the realtor that's selling it to put the 1031 language in there. It's very simple language that buyer and seller are agreeing to a 1031 tax deferred exchange. Now, if it's not in the original contract, we can still fudge around that. We can do it, or they can do an addendum, and so you can still do that. Now, when it's done, when it's closed, then you don't get use of that money. So let's say that's $100,000. It goes into an exchanger, a third party that holds that. There is a fee for that. It's not a huge fee, but you do pay a fee. Now, if you want to use $75,000 of that for a 1031 and pay taxes on the $25,000, you can do that. But there's some hard and fast rules. One of which is from the day that subject property closes, you have 45 days to identify what you're buying. And you have 6 months from the day of that subject property closing where you have to close on the property. Now, this is going to be more important, of course, for things like new construction. Now, I will tell you this, we have had on the borderline of getting 1031s done, and it's scary. So you don't want to do something out of the dirt phase, especially now when you have supply chain issues, labor issues, where it's taking a little bit longer to do. So we're going to guide you through in Oklahoma City or Tulsa what to buy based on the fact that, we want like at least a 2-month cushion. If it's a new home, of course, if it's an existing home, that's not a problem. Now, the other thing about this is we have not been doing 1031 tax deferred exchanges for the last 2 years. First of all, because of the inventory shortage. Second of all, because of a monstrous demand for investors buying properties. And so our, sellers, our builders, they don't want to fool with it. Maybe because they were selling everything they could build out of the ground, but they were still doing business with us because of long-term relationships. So they wouldn't even accept a 1031. I do want you to know right now they are accepting it. We do have inventory right now that would qualify, that's brand new for 1031 tax deferred exchanges or existing. If you need some more help on the 1031, you can always email us, get a hold of us. We'll be happy to help you, kind of give you some information, but make sure that you're working with someone that's going to know what to do. And consult with a title company. They're the ones that are going to set up the exchanger. They're the ones that have done this before. They're going to help you out, but it's a great way to keep increasing your wealth and not have to pay a whole lot of taxes on the property that you just sold.